Hey guys, so in today's video, I'm going to be teaching you a super simple ICT trading strategy that I've actually used in order to quit my job and become a full-time trader. Now, we've been utilizing this strategy for over a year now, and we've generated an average of 10% near enough every single month inside of the VIP group. I've put the entire framework of how to find and execute these trades inside of this completely free ebook that you can download by clicking that link down in the description. So in today's video, we're actually going to be going over some real life trading examples so you guys can understand exactly how to find and execute these trades. And these examples are of trades that we've actually taken inside of the VIP group this past week. If you enjoyed this video, then let me know by dropping a like, comment and subscribe. But without further ado, let's jump straight into this trading strategy. So first, let's understand exactly how we're going to find and frame up all of these trades. And you can do that easily by following this framework. So as we scroll down, we can see that step one is to identify our directional bias. So there's a clear image of exactly what it is that I'm talking about with some text to help you really understand. We are going to be looking for our directional bias on the 15-minute time frame. So in the image above, we can see that price has created a lower low and is on its way to creating a lower high. Therefore, we can anticipate sales from the lower high down to the lower low. So if we take a look at this example that we've got right here, we can see that price was creating a series of lower lows, lower high, lower low. Now we're anticipating a lower high and then a lower low. Therefore, we're going to be looking for sales when price comes up to create that lower high. Moving on to the next step, we can see that the Judas swing happens at the end of the Asia session between the times of 7 AM and 9 AM UK time. So we've got our time and we've got our directional bias. Next is to understand what is our liquidity, and that is going to be our Asia session high and low as shown in the image above. So the Asia session high and low is marked out between the times of midnight and 7 AM UK time. Now, as I said, it's UK time. If you're somewhere else in the world, then all you simply need to do is configure it to your time zone. After we mark out the highs and the lows, we simply just wait. We wait until we get a sweep of either the high or the low, and then we move on to the next step. Now, the next step is to wait for a market structure shift. Now, in order for us to get a market structure shift, we want to see a shift in market structure from either bullish to bearish or bearish to bullish. And we're going to do this by following market structure. So once we've got that market structure shift, we move on to the next step, which is we're going to identify the fair value gap which caused the market structure shift. And that is where we're going to be taking our entry from. Once we've got that, we then move on to the next step, which is where we are going to put our stop loss and our targets. Now, our stops always go above the most local low or high, and we always target the opposing liquidity, which in this case would be the Asia lows. However, if we swept the lows, then we would target the Asia highs. Now, this strategy works really well on indices and currencies. Now, my favorite pairs are NAS and Euro USD. However, I would highly recommend that you do your own back testing to figure out what currency pairs you like the most and which ones you can actually work with better. But now that we've understood exactly how we're going to frame up these trades, let's actually go ahead and find some real examples from the trades that we've taken in this past week. Now, our first example is going to be a NAS sell limit. Now, as we can see, this was the trade that I sent into the VIP group. And if you guys aren't part of the VIP group, then I'm also going to leave a link down in the description for you to be able to join so that you can also take these trades with us, as we average 10% near enough every single month, and we have done so over the past year. Not only that, but you also get access to my full trading course, my weekly outlooks, daily live streams, and everything that you need in order to become a consistently profitable trader. You'll come to understand this as we move along with these examples, because you'll see that we hit TP near enough every single day, because these are real life examples from inside of the Discord. But the NAS sell limit in question was actually taken on the 18th, which was exactly a week ago today. So if you go onto the charts, the first thing that we're going to do by referring to our ebook, which is the framework for the Judas swing, is understand that we're going to go onto the 15-minute time frame to identify our market structure. So our directional bias is going to be bearish in today's example. And the reason for that is because price was creating bullish market structure until we had this market structure shift where price then put in this lower low. Then we had this lower high, lower low, lower high, and now we're anticipating a lower low. Therefore, our directional bias is bearish, and what we're looking for is sells. So we move on to the next step, which is to understand that the Judas swing happens between 7 AM and 9 AM UK time. It's perfectly fine. We're going to move on to the next step, which is liquidity. Now, as we can see, I've already got my liquidity highlighted with this blue box. Now, the reason for that is because I'm using this indicator which simply just highlights the Asia session range so that I don't have to manually mark it out. However, as we can see by my crosshair, this is the midnight candle, and all the way over here, this is the 7 a.m. candle. This was the Asia high and this was the Asia low. So just for example's sake, this would now become our Asia high, this would become our Asia low. And if we wasn't using the indicator, we would simply just place a line like this up here and a line down here to signify where these structural points are. Once we've done that, we now move on to the next step, which is to wait for a sweep. Once we get that sweep, we can then move on to the next step, which is to wait for a market structure shift. So let's drop down to the 5 minute. And as we can see, price then gives us a sweep of the high right there. And now we're simply just going to wait for a market structure shift. As we can see right here, we had this higher high, higher low, higher high, and the price broke below this previous higher low and gave us this lower low. Once we've seen this, we've understood that this is a market structure shift where structure has shifted from bullish to bearish, signifying that we're ready to go lower. So now we move on to the next step, which is to identify the fair value gap that we're going to be taking our entry from. And this is the fair value gap that we actually identified in this instance. So we're going to put our entry at the open of that fair value gap, stops go above the high, and we target the opposing liquidity, which in this case is the Asia lows, following our next steps in the ebook. Now, as we can come over to the VIP group, we can see that this is exactly where we took this trade. And if I play price on, we can see that we get a beautiful tap, minimal drawdown, and we run straight to take profit. Nice and simple. And as we can see inside of the group, we hit take profit for a plus 1.4%. Beautiful entry, beautiful exit, no drawdown. Absolutely amazing. So let's move on to the next example. So our next trade was actually the following day, which was a sell limit on Euro USD. So this is the trade in question. And if we go over to the chart, we're now going to analyze exactly why we took this trade. So first and foremost, we're going to understand our directional bias. And on the 15 minute, we can see that we are bullish, and therefore expectational order flow tells us that after a higher high, we're anticipating a higher low. Therefore, following expectational order flow, we're looking for shorting positions to come down into the discounted areas of this leg so that we can then continue that pro trend bias. So now if we move on to the next step, which is to mark out our liquidity and then wait for a sweep. And as we can see, I've jumped a few steps ahead. This is our Asia range liquidity. As we can tell by the blue box, this was the start at midnight. So that is the midnight candle. And right there is the 7 a.m. candle. Therefore, the lowest point of the Asia session range was right there. And then the highest point was right there at 7 a.m. when it reached all the way up here. Therefore, we've now got our range. And as we can see, price has actually swept the high and is continuously pushing to the high. So if we drop down to the 5 minute now, we can now move over to the next step, which is to wait for a market structure shift. And again, if we just take a look at what's happening with structure, we can see that price has created a higher high, higher low, higher high, higher low, higher high, and then finally it's come and given us a lower low. Therefore, we've shifted structure from bullish to bearish, and now we're going to move on to the next step, which is to identify our fair value gap. Now in this instance, we had this fair value gap right here identified as our entry, and we actually took our position at the 50%. So now, as we can see, this is where I sent the trade into the VIP group, market structure shift, entry at the fair value gap, and we took our entry right there, and then stops go just above the high, and we were targeting the Asia lows. And as we can see, we got tapped into this trade with absolutely minimal drawdown. And then from there, price then decides to start running. As we can see, it's heavily in profit. Whilst this trade was running, I was actually doing some top-down analysis to figure out what's actually going on with price. Now, as we understood at the beginning, we were waiting for price to give us that pullback into the discounted areas. Now, as we can see, price is coming into those discounted areas. And once I saw that on the 1 minute, we had market structure shift, I actually told everyone to close the position for a 2.6% gain because I didn't feel like price was going to push all the way down to the Asia lows. And I'm glad I did that because as we can see, price then does decide to turn around and start pushing towards a break even. So you always have to manage your trades as well. You can't just let them run. But that was example number 2. If we move on to example number 3. So coming onto the chart, the first thing that we're going to do is identify our directional bias. Now on the 15-minute, we can see that price has just put in this higher high. Therefore, again, expectational order flow tells us that we are anticipating a higher low and then a continuation higher. Therefore, our directional bias is an intraday bearish bias. So we move on to the next step, which is to identify our liquidity. Now again, the blue box comes in handy because it has already identified the Asia low and the Asia high for us. So once we've identified our liquidity points, we're now simply going to wait for a sweep. And as we can see, we get a sweep of the highs right there. Next, we're going to wait for a market structure shift. So if we again identify our structural points, we can see that we've got a higher high, higher low, higher high, and then all the way down here, price comes and breaks and gives us a lower low. Therefore, price has shifted structure from bullish to bearish. So now our next step is to identify where our fair value gap is, and it is actually right here. And this is the one that gave us the market structure shift. So now we take our entry right there, we put our stops above the high, and we target the opposing liquidity, which again in this case is the Asia lows. So we've done everything on the tick list, and now we're simply going to play price on. See that we get this beautiful tap straight in, and then from there price does chop around for a while, but eventually we run straight to take profit. And as we can see, we did hit TP on this trade yesterday. And if we move on to our last and final example, which is actually a trade from today, which was again a NAS buy. So first things first, we're going to identify our liquidity points, and again this is our Asia high and this is our Asia low. Then we're waiting for a sweep of either side. Now we get a sweep of the lows right there, and after that we're waiting for a market structure shift. So what we can see is that we had this lower low, lower high, lower low. Therefore, in order for us to get a market structure shift, we need to break above this lower high, and we get that all the way up there. Now once we get that market structure shift, we're then going to identify our entry fair value gap, and we identified this one right here. So this is where we took our entries, so entry at the open of that fair value gap. Stops go just below the low, and we target the opposing liquidity, which again in this case is the Asia highs. Now as we can see, we got tapped into this trade beautifully. Again, minimal drawdown, and price runs straight to take profit. And as we can see, TP hit again. Near enough every single day we're hitting TP using this exact trading strategy. And again, this is the trading strategy that I've utilized to actually quit my full-time job and become a full-time trader. So I hope you guys enjoyed that video and really understood exactly how to frame up these judo swing trades so that you can actually go on to quit your job and become a full-time trader using this strategy too. And again, feel free to download this completely free ebook by clicking that link down in the description so that you can have this entire framework for completely free. So if you did enjoy this video, then don't forget to leave a like, comment and subscribe. And on that note, I'll catch you guys in the next video.